When you're in rideshare, there are 3 different periods to your operation. So there's period 1, which is when you're on the app waiting to connect with a fare. Period 2, when you are on the way to pick up a passenger. And period 3, when you've got a passenger in the car. Period 2 and 3, your rideshare insurance through the company is generally going to protect you. But there are all sorts of gaps that come into play with period 1. That's really what I want to concentrate on tonight. So period 1, you're cruising around. A lot of drivers don't understand that they have limited protection during this period. 1, if they're in an accident that they cause, there's not going to be sufficient insurance coverage to fix your vehicle. You need to be taking out insurance, rideshare endorsements, that's going to protect you. Otherwise, that vehicle might be off the road for a long period of time until you can scrap together the money necessary to get the car fixed. Rideshare companies do a terrible job of explaining gaps like that to drivers when they sign up. You always hear the terms fully covered. Everybody thinks, I'm covered by Uber, I'm covered by Lyft, I don't need anything special. Well, if you go in to your personal insurer and you say, I just need the bare bones because I know that Uber is going to cover me, you are going to be in for really, really bad news if something unfortunate happens. The other scenario would be if you are hit by a driver who flees the scene or hit by an uninsured driver. If you get hit and injured in that scenario during period 1, Uber and Lyft provide bare bones uninsured or underinsured motorist coverage. That means your medical bills, your lost wages, your pain and suffering are really not covered during that period. You are going to be trying to come up with that money yourself. And again, Uber and Lyft tell their drivers, don't worry about it, you're covered, just get the insurance that, come in with the insurance that you've always had, you're going to be fine. That's not true, and we talk with drivers every single day who are injured and damaged as a result. I do want to hit on periods 2 and 3 because it's important to understand where you're covered and where you're not. Uber provides, and Lyft provides as well, $1 million of liability coverage during those periods. That's really good. That's more than anybody's private insurance company or policy is going to cover. But what they don't cover is additional collision coverage, meaning property damage to your vehicle, unless you've taken that out yourself. So let me give you an example. You have taken out a bare bones insurance policy, liability only, for yourself. If you get into an accident during period 2 and 3, say you cause it, Uber and Lyft will not pay to fix your car because you didn't have the coverage in your personal policy. They will match whatever coverage you have taken out. So for that reason, you need to ensure that you've taken out collision coverage so that you are protected. Your car is your livelihood. We all know that. Unlike most jobs where, if I get hurt, I can still get to work. I'll hop on the bus and that'll be just fine. But if you get into an accident, your car's damaged, it's in the shop, you literally can't go to work the next day. You can't earn money. So you have to protect yourself by taking out the proper insurance. Proper insurance in sum is collision coverage and a rideshare endorsement. That's going to ensure that you have no gaps and proper coverage during all scenarios. Don't fall trap to what so many drivers have. You have to take out the protection to ensure your rights are protected.